What if I told you there's a brand new tax law that could slash your retirement taxes to zero? And what if I told you that you only have 4 years to take advantage of it before it expires? If you're over 65, collecting Social Security, or planning your retirement, this could save you thousands of dollars every single year. I'm talking about the One Big Beautiful Bill Act, signed into law in 2025 by President Trump. It's the biggest tax break for retirees in American history, but it comes with a hard deadline, December 31st, 2028. Today, I'm breaking down exactly how this law works, who qualifies, and the specific strategies you need to use right now to maximize your savings before the window closes. The big picture. First, let's zoom out and understand what this law actually does. The One Big Beautiful Bill locks in the lower tax brackets from the 2017 Tax Cuts and Jobs Act permanently. Without this law, those rates were set to expire in 2026. Your 12% bracket would have jumped to 15%. Your 22% bracket would have jumped to 25%. For the average senior household, that would have meant hundreds, maybe thousands more in taxes every year. But this law prevents that hike. 10% on the first $11,600 for singles or $23,200 for married couples. This keeps more of your income taxed at rock bottom levels. These extras are only in effect from tax years 2025 through 2028, 4 years. That's it. Miss this window and they're gone unless Congress extends them, which is never guaranteed. These temporary provisions create what I call a tax-free zone that's bigger than anything we've ever seen for retirees. And if you play your cards right, you could potentially wipe out taxes on your Social Security benefits entirely. The Senior Bonus Deduction. At the heart of this law is the brand new Senior Bonus Deduction. Here's how it works. $6,000 per person over age 65. If you're married and both spouses are over 65, that's $12,000 combined. And here's the beautiful part. This stacks on top of your standard deduction. No itemizing required. It's automatic. Now, why does this matter so much? Because up to 85% of your Social Security benefits can be taxable if your combined income exceeds certain thresholds. What's combined income? It's your adjusted gross income plus any non-taxable interest, plus half of your Social Security benefits. These thresholds haven't budged since the 1990s. So with 2026's average Social Security benefit at $2,071 per month, that's $24,150 annually, more and more retirees are getting hit with taxes on their benefits. But the Senior Bonus Deduction changes the game. Now, there's a phase out for higher earners. The bonus starts phasing out at $75,000 of modified adjusted gross income for singles, or $150,000 for married couples. But for most middle-class seniors, it's a full win, stacking your deductions. Let me show you how powerful this gets when you stack all your deductions together. For 2026, the enhanced standard deduction is $16, but if you're over 65, you get an extra age-based boost. Now add the Senior Bonus Deduction on top of that. Let's do the math for a married couple where both spouses are over 65. Start with $32,200 standard deduction. Add $3,200 for age, $600 X2. Add $12,000 Senior Bonus Deduction. That's a whopping $47,400 deducted before taxes even start. If your total income is $100,000, only $52,600 is taxable. And most of that gets taxed at just 10% to 12%. Compare that to before this law, you'd be paying taxes on closer to $70,000. Let me give you another example. Your deductions, $6,000 senior bonus. Without these deductions, you'd owe taxes on your Social Security benefits, probably around $1,000 or more. With these deductions, you could eliminate that tax bill entirely. Real-world scenarios. Let me show you how this works in real life. Imagine a married couple in their late 60s. Both are collecting Social Security, $2,071 each per month. They also have a $30,000 pension and take $20,000 in IRA withdrawals. Before this law, their combined income would put them over the threshold. They'd owe taxes on 85% of their Social Security benefits, about $4,200. With the new deductions, their taxable income drops below the key thresholds. Like that $40,200 tax bill could be reduced to zero. Or take a single retiree who's working part-time making $15,000 on top of their Social Security. The $2,400 in total deductions covers most of their income, leaving them with minimal or zero tax liability. Now, let me be clear. This law does not outright eliminate taxes on Social Security benefits for everyone. That's a myth. But for low and middle-income seniors, which includes about 88% of Social Security recipients, according to White House estimates, it effectively does eliminate those taxes by inflating your tax-free zone. With 51 million seniors qualifying, this is the biggest tax break for retirees in history. Now here's where it gets really exciting. The strategies you can use to turbocharge these savings before 2028 ends. Strategy 1. Supercharged Roth conversions. With your massive deductions in play, you can convert traditional IRA or 401k funds to a Roth IRA right now and pay little to no tax on the conversion. Why does this matter? Here's an example. Normally, that $40,000 would be fully taxable income. You'd owe taxes at your regular rate. But with your $47,400 deduction shield in place, that conversion gets absorbed. Zero extra tax. Now do this every year from 2026 through 2028. That's 4 years. 4 years times $40,000 equals $160,000 converted to Roth tax-free. If you don't do this now and you wait until later when those deductions are gone, you could pay 22% or more on those conversions. Spread out your conversions strategically to stay in the lowest brackets. And use tools, like our free Roth calculator in the description, to map out your plan. Strategy 2. Capital gains harvesting. This is a move a lot of people miss. You can sell appreciated stocks, real estate, or other assets and realize the gains tax-free up to your deduction limit. Then you reset your cost basis without paying a dime, which sets you up for lower taxes on future sales. Here's how it works. Normally, if you sell, you'd owe capital gains tax. But in 2026, with your deductions eating up so much of your taxable income, you realize those gains and pay nothing. You've essentially given yourself a free reset. And if you're still working a side gig, maybe freelancing on Upwork or driving for Uber, you can time your earnings around this window to keep your adjusted gross income low and maximize the phase-out benefits. Another powerful move, withdrawal optimization. Pull money from your pre-tax account strategically to fill up your low tax brackets now. With deductions eating up the bottom, you're only paying 10% to 12% on chunks of income that might cost you 22% or more after 2028. And don't forget health savings accounts. Contribution limits for 2026 are $4,400 for individuals or $8,650 for families, plus a $1,000 catch-up if you're over 55. HSAs give you triple tax benefits, and the withdrawals for medical expenses are completely tax-free forever. The 2028 deadline and final strategies. Let me be crystal clear about something. This 4-year window ends on December 31st, 2028. After that, unless Congress extends these provisions, they disappear. The enhanced standard deductions, reduced. So if you're planning to retire in the next few years, or if you're already retired, this is your moment. Here are a few more quick strategies. State taxes matter. 38 states plus Washington, D.C. don't tax Social Security benefits at all. If you're in a high tax state, relocating could amplify your savings even more. Track your earnings meticulously. Use your My Social Security account to estimate benefits. Use IRS tools for tax projections. If you're under full retirement age, 67 for most people, remember the earnings test. You can earn up to $24,180 in 2026 without penalty. And any benefits that get withheld because you earn more, they get added back to your future checks. The clock is ticking. More travel. Helping your kids or grandkids, leaving a legacy, it's all within reach. Hit that bell icon so you don't miss updates. Share this video with a friend who needs to know about this opportunity. And drop a comment below. How will you use these deductions? What's your biggest retirement tax concern? Let's make your retirement unbreakable.